received $20,000, what would you do with it? Our experts have some ideas for you. It is time for Secret Stash. So here's my role today. I am a 50-year-old man, one kid in med school. I make $150,000 a year, and I want to retire, really important, in 10 years. I also have some debt. Michael Lee, right beside me here in New York. He is managing partner at Tiger Wealth Management. And by coastal chat from California, Jason Rotman. He is president at Lido Advisors. Michael, what should said investor, in this case, me, do? I mean, I'm still paying for my kid in med school.
You know, that's a personal decision. I would say after the first 4 years, maybe it's time for your kid to take care of himself.
Take care of himself.
But then again, you know, everybody has a different relationship with their kids. In terms of debt, I would just make sure if you have it, it's the most tax efficient. A lot of people have this thought in their head that they need to retire with their house paid off. Well, a lot of people you put you in a situation where you're house rich and cash poor. Try getting a mortgage when you don't have W-2 income or after you're retired. I mean, the most famous story about that is Ben Bernanke couldn't get a mortgage after he left the Fed.
That's right.
So what I would just say is if you're going to have debt, it's not the worst thing to have. And if you can lock in a 30-year mortgage at the lowest interest rate you're ever gonna, now's probably a pretty good time. So
don't be afraid of debt, especially if it's just for your primary residence.
Yeah, and just make sure it's the most tax-effective debt. And then with this 20 grand, what I would say to you is the best place now with where interest rates are is the stock market, and particularly what I talked about a couple of weeks ago, the financials. I'm still a firm believer that the Fed's going to raise rates sooner.
Even though Jamie Dimon, CEO of JP Morgan Chase, actually said, Wall Street, look out, Silicon Valley's coming for you.
Well, I think the best bang for your buck, risk-reward return, is in the financials, okay. Right? And I would also add to last time is the brokers. So if you saw the jobs number a week and a half ago, not only did the big banks trade well, but Goldman Sachs traded really well. So I'd say take a look at that too.
All right. I'm going to get a perspective from a little closer to Silicon Valley. Not that I don't believe you. As you know, I'm sitting right here with you in New York. Jason, your take.
You know, I would have to dispute Mr. Lee's kind of contention that the best place with interest rates where they are is the stock market, especially with this guy with a $150K salary. He probably owns his home already because he's making $150K a year and he's 10 years away from retirement. I would strongly recommend, for three main reasons, which I'm so excited to detail, buying a rental income investment property in any one of the top 10 cities I was recently profiled where millennials have moved most frequently over the past 3 years, such as Orlando, Austin, Texas, so on and so forth. I think an investment, you know, you can, and this is an alternative investment, but this is what I specialize in.
So, Jason, you're also saying, not to cut you off there, but as Michael did, maybe the kid in med school should take on some school debt, and this guy, 50-year-old me, should worry about himself.
Sure.
Okay.
Absolutely. I mean, kids can work these days. I mean, kids put themselves through school, so it's not like the kid has to rely on his dad to pay his way through postgraduate school. So I think if I'm the father making $150K a year, I want to retire in 10 years. I want income for myself, and I want to teach my kids self-reliance, which is a lost art these days in some circles. So I want to retire. I need income. I want a relative value play, because real estate in many areas has not reached the peaks that it did 6 years ago, whereas the stock market has already surpassed it. So you get income, you get appreciation, and you get relative value with my idea.
All right. So Jason says go to real estate. Michael Lee says go to the stock market. Thank you both for your ideas.